This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachardis. Thanks for joining us at XM.com. Wall Street was unable to extend its winning streak to a fourth day on Friday, but still managed to post its strongest week since 2009. Stocks had been steadily rising after a big gap lower at the open, but went into reverse after the Federal Reserve said it will rein in its daily purchases of treasuries to $60 billion from April 2nd, highlighting how jittery markets still are about possible liquidity shortfalls. However, it was a somewhat calmer picture today, with U.S. and European stock futures inching higher at one point. Sentiment remains fragile despite a plethora of stimulus being announced by central banks and governments in recent weeks, and today's bullish efforts could be down to month-end and quarter-end flows as investors adjust their portfolio holdings. The possibility of markets being hit by another round of dollar shortages remains a major risk, bringing more pain for emerging market and risk-sensitive currencies, and there is already evidence of this at the start of the week's trading. The euro and the pound were struggling as Europe remains a major concern for investors as the COVID-19 pandemic shows no sign of slowing. In contrast, although the United States is now the new epicenter of the disease, the death rate is relatively low. Investors might therefore see the U.S. as being better placed to recover from the crisis, and the U.S. dollar was last up 0.6% versus a basket of currencies. Oil prices tumbled on Monday, extending last week's losses as the prospect of a quick end to the crisis continued to diminish. Many countries have imposed strict lockdowns on their citizens in a bid to contain the spread of the virus, and tougher measures could yet be imposed in some places if existing policies don't work. The timescale of the shutdowns is a major source of uncertainty for businesses and for investors, as until there is some clarity on how long these restrictions will stay in place, there's unlikely to be a convincing turnaround in market sentiment. This has left commodities such as oil running for cover, with Brent crude plummeting by 7.5% to the lowest in 17 years. This was today's Daily Market Comment. Thanks for joining us at XM.com.